What's up, everybody? This is Jimmy with Trade Decoded. It is 1:27 in the afternoon. I'm making this video a little bit earlier than normal. That's because I got a lot of stuff to do today. Today was a beautiful day. Not only because the market provided a lot of opportunities, the chart did mostly what we wanted it to do. We had a great day overall as a community. Today, I took what is a home run trade for me. My one and only trade today was an 80.01% win. Was a beautiful trade. I walked everybody through the whole thing. And then we found several other trades that actually ended up becoming better than the one that I took myself. But nonetheless, we're going to go ahead and cover those here in just a moment. But if you're interested in learning what it is we talk about in these videos to help fill in the gaps that may be missing from the videos, you can find all that information here in this book. There's a lot of good stuff in there, guys. It's not expensive if you get the ebook, and it's very, very helpful. Also, if you'd like to join my Discord community, I'd love to have you. First week's completely free. We have several people in there today. One of these trades specifically, we walked a brand new person through. They watched it happen with their own eyes. We got 3 minutes in advance to get into it. Ended up being a 35 to 40% win in just a short period of time. So if you're wanting to know what goes on in here, take advantage of the free week. It costs you nothing. You don't put any credit card information in. You just show up and listen and watch. And it's either going to be something you enjoy or you don't find useful. If you don't find it useful, you've lost nothing for trying. But there are ways to start to learn how to find trades that have a higher probability chance of winning than losing. And with that information, you could start to make better trading decisions for yourself. Okay? So consider joining our Discord. We'd love to have you. And other than that, let's go ahead and get into the charts and see what we were seeing. As always, we do a call put scenario every morning. 9:25. I find the most recent support that exists at that time and the most recent resistance that exists at that time. And as long as there's room above those two levels to make any money, those are the things that we're trying to play. If you're trying to play it, right? It's a super aggressive move, and it's not for everybody. I have plenty of people that only trade this, and I have plenty of people that don't trade it at all. Either way, it doesn't matter. All we're looking for is a break of structure one way or the other and hoping that it makes it down to where the chart says it should. Sometimes those are nice, clean trades. Sometimes they're very uncomfortable trades. Sometimes they work. Sometimes they don't. They work more often than they don't if they're traded properly, but that's not the point. The point is you're either prepared to take it when it's time or you're not. If you're not prepared, then it's too late to get in. We're not expecting these moves to last forever. We're not expecting big returns out of these moves, but we are expecting to execute in very specific ways if you're going to take it, right? You can't gallivant around this and say, no, I'm not really sure if I'm going to do it. You've got to make that decision before the market opens. And that's what I do starting 5 minutes before the market opens. I prefer to play the call put scenario. Sometimes, such as today, the move happens too quickly for my option chain to populate and I can't get into the trade. If we would have hung out above our put line for just a couple of extra seconds, I would have taken this trade and it would have gone right to where we hoped it was going to go. We had an alert there set and everything. 5 minutes before the open, our alert to the downside was this support here. The one support that we were using for the entry is this white line right here at 594.79. We were hoping to get through that and head down to the next support, which is right here. And as you can see, we double bottomed on that exact, when I say exact, I literally mean to the penny point. Again, I didn't get the opportunity to take this trade, but several people did. Some people made 9% on it. Some people made 12% on it. But a lot of those people made that 9 or 12% in seconds. Okay? It works. All we're looking for is a break of support and to go down to the next support. As we moved up to the upside, okay, the reason I didn't take these calls are several. Number one, and more importantly, it's a known resistance here from pre-market. Number two, ADD was printing red. Okay, now this is a big green candle on Qs. We hit a level of support there. Several people jumped into these calls because we breached the line. And again, we were looking for the resistance right over here. And as you can see, to the penny, once again, we hit that level. It was a much cleaner move up on SPY than it was on the Qs, but it doesn't matter. It did what we wanted it to do. We got a 45-cent move down and a 50-cent move up. Both of those moves, if prepared and willing and ready, pay you a solid 10 to 20% return on your investment. The upside took a couple more minutes than the downside did, but it worked nonetheless. It wasn't until 9:38, almost 9:39, that I took my one and only trade of the day. I will explain what I was looking for. I'll explain why I was taking puts. But for all intents and purposes, it was an A+ setup, the setups we like to find every day and wish they could be this clean and this good every day, but that's just not the realization usually. However, why were we looking for puts after several failed attempts to get through this resistance? Well, there's several reasons, guys. Number one, every one of these candles up here has wicks on top. Now, that may seem like a nuance to you, but if you've been trading or you understand price action, wicks on the tops of candles indicates that sellers are there trying to keep the price from moving higher. Will they succeed in that? Well, we don't know, but it is a good indication that the buyers are up against a battle with the sellers. That's good information to have if you're trying to consider getting into calls. Not only that, we're at a resistance level, not only on the Qs chart, but also on SPY chart, which was also struggling to move higher with wicks on top. Couple that with the fact that ADD started to print red shortly after this fight started to take place. And so not only am I not looking for calls because of this, I'm trying to justify a reason to get into puts now. Now, initially, we were looking for a break back below our put line, and we were hoping for the same move that we got this morning, only better prepared for it now. And in fact, the second opportunity to take this trade was even better than the first one. Why? Well, if you didn't catch it, it's because at the open, which we anticipated was going to be the case, we had a big green candle on ADD. So jumping into these puts, you had to ignore ADD, which we oftentimes do on the call put scenario. But coming down to this line for the second time, and knowing that we had sellers up here actively trying to keep us from moving up, coming off of a resistance, ADD is printing red. Now we have momentum in our favor, A+ setup. So we're expecting to get down to, and hopefully through that resistance, or support rather in this case, and at least down to the next support. Now, when I get in on this candle, I did not get in at the top. I got in all the way down here, very much close to the closing of this candle. I think there was 13 seconds left before the close. So I didn't get a great fill as far as price goes, but I got into a trade that I was comfortable getting into, and then we did get through the put line, and then we did get all the way down to, in very short order, our original profit target. Now, the profit target is not a dollar amount in this case. It's a spot on the chart, just like our stop losses are, okay? And I'll explain why that comment matters in a future trade here. But because we closed below that support, we're expecting to go down to the next support. Well, when we get down to the next support, ADD is still printing red. I said, guys, I'm hanging on to this trade. I'd love to see a lower high here. I'd love to see a move back below this line. And ultimately, you can see the alert's still set. I'd love to get all the way down to 592.51 because it's the next real support down from this one. All of these orange lines here, we're not going to get into it, but they're mathematically calculated. As you can see, they work as well. But I wanted to get all the way down here. And by the time we got to this point, I was so much in profit that I was comfortable with the idea that, hey, this might not get down there. It might take a little bit longer to get down there. Whatever the case is, as long as it looks good to justify staying in the trade, I'm hoping to make it to my intended target. Obviously, we didn't get there. But let me tell you what started to make me think that I should implement a trailing stop or put a stop loss in profit. Because up to this point, I still didn't have a stop loss in profit. I had a market order open, ready to send, right? To close the order. So we bounced off of the next line down, but right before that, we got this ADD candle right here. Now, I called this out the minute it happened. I said at 9:45, I said, guys, I don't like that ADD candle. I know it's red, but the wick on the bottom of that means we hit a pocket of buyers. The very next candle on ADD was a very big green candle. Okay, that right there is when I said I'm putting in a mechanical stop so that I don't get stuck in case this thing does not continue down from here. So I got stopped out on the very next candle through a mechanical stop, but I was all right with that. I wished it would have continued down. It didn't. And then shortly thereafter, I was very thankful I got out of that trade. Now, if you didn't have a mechanical stop down there, your stopping point needed to be a close above the trend line. In the very last case scenario, would have been a move back above the lower high here. Now, what's important about that is not only should you be getting out of there, but the reason you'd be getting out of there is because if we make it through that resistance, we're expecting it to make a move back up to the next resistance in line, which is way too far of a pullback to be holding on to puts because you're going to lose a butt ton of money in that situation. However, this presented a Jimmy trade setup to the upside. So we closed on the other side of the trend line. We got above resistance, which was the most recent lower high to our left, and ADD was printing green. Again, guys, this is another A+ setup to the upside. And you had plenty of room to go until you were going to come near a resistance. Now, we only got within 7 cents of that resistance. And when we got up there, ADD candles started to get a little bit smaller. SPY was at a resistance level at this point as well, which, oopsie, I forgot to transfer these over to the SPY chart. So again, it's a combination of both charts getting to or at resistance. ADD's candles are getting a little bit smaller. We didn't know it was going to turn around and go down from there, but it's just about being aware of your surroundings, right? Being aware of where you are in the chart. Okay, we'd like to be prepared that this might stop moving up so that we can lock in profits if we want. We all hope that it continues to go up, especially if you're in calls. But if it doesn't, you're not going to panic sell or do whatever the case, whatever it is you might do in the heat of the moment. We hit that resistance. We come back down. And then what's this? This is what a higher low looks like. Now, I wouldn't have bought this pullback on this candle. Why? Even though SPY is on a support level, right? It was an old resistance, turned support. Q's pulled back to an old resistance, turned support, but ADD at this moment was still printing red. I will not buy a pullback unless all things are go, okay? Higher low gets proven right here at 9:57. ADD starts to print a green candle. Now we're looking to get into this trade, hoping first to make it to the first resistance up, but because of the higher low, we're expecting it to get through that resistance and head to the next resistance, which was right here. This is why this exit exists, okay? Then we pull back, old support or old resistance, new support. Called this entry out. I said, guys, this could be another higher low. As long as we stay above that line and ADD keeps printing green, we should expect it to run up to the next resistance. Higher low means we're going to get through the first resistance and head to the next one. That all happened. After that, we pushed through, made it yet to another resistance, pulling back. Now, this trade right here was a great opportunity. Why? Because I said out loud again, guys, it was because one of our members was saying, Jimmy, I can't bring myself to buy calls. It feels overextended. I understand that feeling, guys, and I'm sure you do too. The fact of the matter is this. Your feelings will prevent you from doing things that may save you, but it also oftentimes keeps you out of a winning trade. Think about how many times you didn't want to buy calls during an uptrending day because, and again, I'm guilty of this too. It's moved so much that there can't possibly be enough room left. It can't keep going up all day. And it won't go up all day, and it won't go down all day. But at the end of the day, you've watched that trade in that scenario continue to go up sometimes several dollars after you've made the choice to not trade it. That is where you have to trade the chart and not your heart, right? Trust the chart, not your heart. Your heart is trying to protect you. And in many cases, even on the bad side, your heart keeps you in a losing trade longer, just like it keeps you out of a good potential trade as well. The chart doesn't care about your feelings. It doesn't. It doesn't care. So we have to get comfortable with the idea that our feelings have nothing to do with what happens in the stock market. It has everything to do with what we choose to do in the stock market, but it has nothing to do with how the market is going to react. You have to get comfortable with trusting something that is not your feelings. You have to get comfortable trusting the chart. If you cannot do that, that's fine. Don't take the trade. But if you come to the realization that your feelings don't matter in relation to what the chart does, then maybe you can get over that hurdle and start taking decent trade opportunities like this one. So we are at all-time highs. We pull back. I tell everybody, I said, guys, we're printing green here. This looks like an ideal situation for a call entry. Because it's going to be a higher low, we're looking to break this resistance and head up to the next resistance. Okay, that entry gets you in here. Where's your stop loss? The line that you're pulling back to buy on. This is a pullback to support with ADD printing green during an uptrend. Best time to buy calls because we are expecting the buyers to keep pushing up. We know that if we close below that line, then we get out of the trade. So you have a nice tight stop with a candle close below the support, and you have a higher probability chance of continuing up. Now, if ADD is printing red at that time, then don't take the trade. Okay? But that ended up being a beautiful move to the upside on Qs, on SPY, with whatever you're trading. It doesn't matter. Okay? It doesn't matter. Then we find yet another pullback to support during an uptrend, another higher low. We're looking to make it up to the first resistance up. When you get there, ADD is moving more sideways down than up or down. There was still another leg up to the next line up on both charts, hitting resistances at the same time. We should have a circle there as well. Guys, I put these circles here every time we're suggesting potential profit taking, okay? If you're going to stay in these trades, that's okay. Put a stop loss somewhere in profit. Hope it keeps going higher. If it doesn't, you get stopped out with something. Okay? There's nothing worse than taking the risk or mustering up the courage to take a trade only to see it go from nice and green to red or break even or a lot less green, right? That happens all the time. And several people today have good, beautiful, in fact, we had a guy down here in this put, held it all the way up until he was down 80% on the trade. Okay? You can't do that to yourself. You destroy your confidence that way. All right? Jimmy, when would you be looking for puts? Again, I want to see a lower high. I have two criteria for puts, guys. If we're trending up, two criteria. Number one, I want to close below the trend line. Period. That takes calls off the table and it justifies my idea or intentions for considering puts. Doesn't get into puts there. We got a lower high here. We close below the trend line. And the second situation is I want to break support. Okay? I want to break support and I want to hope that we're going to get down to the next support, which is this blue line here. We talked about this trade. It was a beautiful trade setup. Everything looked good. It worked out much better on the SPY chart than it did on the Qs chart. The reason we got in before the support was because of the lower high. ADD was already printing red. Again, this is an A+ setup. I justify getting into these trades a little bit more aggressively because of the lower high. ADD is already printing red. We broke the trend line. We're hoping to make it down to the next support. The stop loss on this is the lower high. If we close back above the lower high, you stop out of the trade. Otherwise, you stay in. Had a gentleman, a new person in our group today saying, man, I got these puts. I got in a little late. Pull back here. He was down 21%. He says, Jimmy, I'm down 21%. Is this a cut point? I said, having a stop loss at an arbitrary number, being a percentage on the trade that you're down or a dollar amount that you're down doesn't make any logical sense. Okay. And the reason for that is it's an arbitrary number. It's not, there's no reason that number should be the stop loss. Meaning, and I told him this word for word, I said, the chart dictates my stopping point in my trades. Meaning, I don't care because I don't know what percent or dollar amount I'm going to be down, right? When we get to the stopping point, I just know that if I close on the other side of that that lower high, that's my stop point. It might be 10%, it might be 30%. If your entry was right, it shouldn't be 30%. If you hesitated and you bought the bottom, then yeah, you're going to be looking down the barrel of a 30% loss at that moment. Fortunately, ADD was still trending down. I said, for me, it's a close back above this line. I have to give that resistance a chance to save my position. And it did exactly that. This gentleman stayed in the trade. He got to move down. Things got easier. We got moved down. SPY, it was a beautiful move to the downside. Paid a lot better than the Qs would have. But nonetheless, you got to stay in. The gentleman didn't panic. He did thank me for keeping him in check, keeping him, based, which is much easier for me to do when I'm not in the trade. I'm not in this trade. So I could talk people through it. Okay. I can be the voice of reason for you. I will always tell you when you should consider getting out of the trade and, why I would stay in the trade if I was in it, right? The rules don't change, right? But the emotions will change how you treat the rules. Okay. So if I'm not in this trade, I have no emotional attachment to it. It's easier for me to say, yeah, as long as that resistance stays intact, we're hoping to make it down to the next support. Very easy, justified by the fact that ADD is still selling off. Okay. That ended up becoming a very, very nice move down on SPY. Look at this. Beautiful move. Okay. So, and then we got a little bit of a lower high here, which is tough to see because if you're looking at wicks, but still it didn't make it up to this. We breached it, but we never closed below it. And we got the move we hope to get. Then we start putting in higher lows. We get up to the high of day again. And at this point, this is the last and final trade because by this point in the day, there's so few people left in the trading room because everybody has already made their money for the day, which is a beautiful thing, like half work days. I'm going to share with you guys one of our members' month. He just shared his profit calendar with me today with some very, very kind words, which I will show you right here. I don't know if you could see it up here, over there, wherever it is. These are the types of things that make me get out of bed and do this every day, guys. And there's no shortage of people that are having these types of progress and all the things. When it's done properly and you follow the rules and you stay modest in your position sizes, these are the results that this gentleman has gotten because of that, right? Is it going to be the case for everybody? No. But do these setups work way more often than they don't? Absolutely they do, okay? As I was talking to one of our new members, you know who you are, you're out there, my man. We hit we were putting in lower highs. And this gentleman says to me, Jimmy, what do you define as a wedge? And is this a bottle cap scenario? I explained to him the whole bottle cap scenario. We're not going to get into that in this video, but we had a situation where Qs were putting in lower highs and SPY was putting in higher lows. And ADD started to print some red. And I said to him, again, this is that trade I was telling you guys before that we were talking about 3 minutes in advance. He said to me, Jimmy, where would you be looking for your next trade or something to those effects? And I said, at this point, I'm looking for this thing to break low because the Qs are putting in lower highs. And because Qs are putting in lower highs, I'm expecting support to fail and for the Qs to go down to the next support. Now, we were talking about this over here at 1137, 1138. Okay. Now, at this point, we wouldn't have been in this trade yet until 1139 or 1140. Why? Because at this moment, we were coming back up to touch the trend line, which is your stop loss if you take these puts. ADD at this point is printing red now for the first candle here, the second candle here. We are putting more pressure on the support, so we're expecting that support to fail. This is a lower high. down we're looking to go. This trade right here is exactly what happened. Now, he said to me, but what about the fact that SPY is putting in higher lows? I said, if the Qs go, SPY is going to go. If Qs go down and ADD is going down, SPY doesn't have a choice but to go down. Okay? This was the entry point here. A close above that trend line is your stop loss. And we're looking for that move to go down to the next support. As long as it gets down to that support and we put any lower highs on the way or ADD starts printing red again, we're hoping to go down to the next support, which was right here. All of those things happened. That turned into another monster trade, which was what we closed out our day. Because after that, 8 minutes later, I get off the mic. So today was a great opportunity if you could get past the bias, if you can get past the idea that it can't keep going higher or it can't go lower. Guys, trading with a clear mind, albeit extremely hard to do because emotions will always play a factor in what you choose to do. Okay. Unfortunately, and I don't believe that there's ever a way to not have that be the case. Now, I think emotions will always play a part in your trading. We just get better at keeping them from dictating what choices we make while we're in a trade, right? So it's always going to be exciting to make money and it's always going to suck to lose money, right? You can't get around that. It just in that excitement and that suckage will get more extreme if you're playing, unreasonable position sizes. So just keep that in mind. But it will always feel good to win and it will always hurt to lose. And unfortunately, those feelings change how we trade. I will never be one to shy away from that. I know that for a fact, and I truly believe that there's nobody out there. And if you are, I am jealous of you, to be very clear, that could trade without emotion being involved. Now, I don't know if you guys noticed in that chart that I showed you, and I'll show you again right here or here, whichever one looks better next to my beautiful face. I want you to take notice of something. Number one, look at his two smallest winning days. And then right below that, look at the number of trades he took on those days. Do you think it's ironic or unusual that the trade days that you have more trades, very often than not, those are either red days or smaller green days than the days you take fewer trades? Look at the rest of his winning days. Look at the number of trades he's taking on those days. Now, he tries very hard to be one and done. He definitely tries very hard to be 3 and done at the most, which is my rule of thumb. I don't ever take more than 3 trades in a given day. In fact, it's rare nowadays that I take more than 1. But that's because I truly believe, and if you know, that the more trades you take per day, the higher level the emotions become. It's like carryover, right? Your first trade of the day, to me, is going to be the most comfortable one that you take, especially if you wait for the right trade setup. And regardless of the outcome of that first trade, those emotions that were created during that trade and the results of that trade will absolutely carry into the next trade that you take. And regardless of what happens in that second trade, you now have the emotions from the first one that got you involved in the second one. Both of those sets of emotions are going to carry on into every subsequent trade for the day that you take after that. And very quickly, those wheels can come off and it sucks. Less is more. Any successful day trader, I promise you, successfully doing this for a living is minimizing the amount of time that they spend in the markets because they know that exactly what I just said to you is accurate. Don't get caught up believing that every time you get into the stock market, you're guaranteed to win money. That is not how this works. In fact, I argue the exact opposite. Okay? So with that said, we're going to wrap it up. I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join my Discord community, well, I'd love to have you. There are links down below. Please join us. And if you'd like to read about what we look for every day in these videos, well, as I had mentioned before, check out the book. Oh, it's such a pretty book right there. And that's pretty much it. So I hope you all had a fantastic day. Till tomorrow, I love you guys. See you.